Today on Resource Talks, Rick rolls back after, well, really, Rick, after it's been too long. So thank you so much for doing this.
Thank you. And before we start, congratulations on the growth of your channel and on the very high quality programming that you've learned to produce.
Well, thank you so much for saying that. I wish I could take all the credit. A lot of that credit goes to my wife, but even more so to you and kind of putting me on this path. So thanks so much for doing this. Really appreciate it. Just briefly for people watching or listening, if you want a summary of this conversation and all the other interviews that we do on Resource Talks, go to resourcetalks.com. There's a free newsletter. It goes out once a week with a bullet point summary of all the conversations from the week before. I know we don't have too much time, so that will be about it for pleasantries. I'm gonna get down to business now. You told me almost 2 years ago that silver was one of the most hated metals, and that's clearly no longer the case. It's not as hated. You even said that if you were rating silver, which you don't typically rate commodities, as we talked back then, but you would rate it as a 4 at the time. And to be fair, I only gave you like 20 seconds to think about it. But is that still the case today? Now that silver is very much in favor, where do you place it?
No, silver is unhated. And as you rightly point out, the easiest money that's made in speculation is the move from hated to unhated, which has already occurred in silver. I believe that silver has farther to go, but I'm also a disciplined speculator. So in my speculative silver stocks portfolio, I've sold between a third and a half of my position. I've maintained my positions in the hybrid silver companies, the Pan Americans, the Wheaton Precious, and I've maintained my positions too in the high quality Latin American producers, the Buenaventuras, the Peñoles, that sort of thing. But what I laughingly call the silver animals, that whole panoply of silver exploration stocks that have some silver in the ground but don't have the means to produce it. I've been a fairly aggressive seller of those. To be clear, I think the complex goes higher. I don't think that the silver bull market has really started. I think we've seen signs in the last 4 weeks that leadership is changing from gold to silver. But to be honest with you, I don't care what I think. If I have a speculative position that's up 400%, where I haven't seen real improvement in the underlying company, with the exception of the commodity price, I've learned to take my money off the table. A circumstance where I can sell between a quarter and a third of my position and eliminate all of my downside in return for giving up a quarter or a third of my upside seems like a hell of a trade to me. So that's what I've done.
Is that a hard and fast rule where you're like, I'm up 400%, 5x, I'm going to take some off the table? How do you judge that?
I don't have any hard and fast rules. If it's too easy. Well, here's what I do, Antonio. You'll remember in earlier conversations where I said the money in exploration and development was made answering unanswered questions. I try to figure out what the probability of the yes answer is, how much time a yes answer will take, and what a yes answer is worth. And if the market gives me the market capitalization that I had hoped for with a yes answer before the question has been called, I take money off the table. That's free money. It doesn't matter to me if I think the stock is going up. I don't care what I think. I think October is going to be a blisteringly hot month in speculation. And I'm using it to reduce my speculative positions. Most people, particularly younger people than me, would try to squeeze every farthing out of their position. I've learned to be different. I've learned to pay attention to the market in reverse order. When the momentum is, well, I do what the market demands. Right now, the asks are getting taken out. So I'm supplying some asks. 2 years ago, the bids were getting taken out. So I supplied some bids. I accommodated the market. When people wanted to exit, I was a buyer. Now people want to enter, I'm a seller. And yes, I think it's going not merely higher, but much higher. But to reiterate, I don't care what I think. This is an easy time to take money off the table that was easy to make 2.5 years ago.
I think you once told me that you do what the market makes easy for you to do. If there's a lot of buyers, you're a seller. If there's a lot of sellers, you're a buyer, essentially.
Exactly right. And the silver space has got a plethora of buyers. I was looking today at Paul Harris' work for the Mining Journal about all the small silver financings that are taking place. When the companies are trading large amounts of their equity for cash, they're telling you that they think the cash is worth more than the equity. When they're using their money to buy in shares, they're telling you something different. And you're wise to learn. Now, I'm not trying to say that the money that they raise can't be put to good effect to lift the fortunes of all the shareholders. All I'm trying to say is that when a company with a $100 million market cap does a $25 million financing, they're telling you that they view the money as being worth more than the stock. And you're wise to listen.
Well, I was told that the three main rules of junior mining are take the money, take the money, take the money.
In a bull market, in a bear market, the rules are take the stock, take the stock, take the stock. If you have good people, you just have to look at the market signals and do the opposite.
Mm. Yeah. Well, what if someone's listening and they're like, Rick, I love you. You're not a silver analyst though. You're a credit analyst. I still want to go with silver. But what are the names that I hide out in from the perspective of where? Are we talking silver producers, mid-tier producers? Is it the juniors that are finally going to come in the flavor of the day? Or where do you hide out? Where do you find value?
If you're willing to take some risk, probably the development stage juniors, high quality development stage juniors, Abra, Visla. If you have some courage right now, Aya. But I think I'm going to interview Benoit LaSalle. You may know that a short report was published yesterday.
Yep.
And I'm hoping to interview Benoit LaSalle in the real classroom and allow Benoit to give his side of the story. I will admit, too, I'm predisposed to Benoit. I was a large Semifo shareholder, and that had a very, very happy ending for me. But I think depending on the outcome of that interview, I would likely be an Aya shareholder. I love hate, and Aya is roundly hated. If you are willing to tolerate political risk and you think that silver is going higher, I count on both those scores. I think perhaps you look at Fresnillo, albeit the current president of Mexico has personal enmity for the family that controls that company. Perhaps you look at Buenaventura, but you expose yourself to real political and social risk in Peru. I think Pan American Silver, or Pan American Minerals, by the way, is irrespective of its silver assets in pretty good condition. They sold some redundant assets, paid down some debt. They have worked on the assets that they acquired that required sustaining capital investments. So I would own Pan American separate and apart from its silver pedigree. I have a very large position in Wheaton Precious. And while I'm still selling other stuff, I'm still buying Wheaton Precious. You'll notice a 72-year-old's skew away from the penny dreadfuls, which is where I cut my teeth, more towards market beta than alpha.
What are you buying when you buy Wheaton Precious Metals? Is it Randy? Is it the assets? Is it the headwind? The tailwinds in this case? What are you buying?
I think you buy three things. I think, yes, you absolutely buy Randy Smallwood. I've known him now for more than 3 decades, since he was a contract geologist in Wheaton River Gold Mines. And I've watched his progression over 35 years. And I invest in people. Randy is very, very, very good people. People look at Randy and they think of him as a commercial animal. He's a pretty damn good geologist. And he's a good geologist in that he's sort of a senior statesman now. He's good at hiring geologists and engineers. He's good at mentoring them. He's good at mobilizing them. He's good at understanding their biases, so he uses them for what they're good at and ignores what they're not good at. That's an unusual talent. He is also commercially extraordinarily astute and very disciplined. One of the things I like about Randy is the last time I interviewed him, he talked about Wheaton on a per share basis. He didn't talk about aggregate cash flows across the length and breadth of the company. Those guys are serial diluters. He talked about it on a per share basis, which is what matters to me. I like that. And I like the fact that he said, as a financial intermediary, one bad deal blows up 5 good deals. So you make money by what you don't do, not by what you do. That's an unusual discipline in our space. I own it too because I keep reading analyst reports that say that the sweet spot for the royalty and streaming space is behind us, that there's no more good big deals to do. And I believe that the sweet spot's ahead of us. I believe in particular that the spate of development that will need to take place in the copper space will require 150, $200 billion. And I think a substantial amount of that will come from selling byproduct streams on precious metals to lower the upfront per share capital expenditure for copper. I also think there's the potential to do very large transactions involved in sovereign countries wanting bigger equity stakes in mining operations in their territory. And one of the ways I think that you do that you finance that, is by streams. So while the analysts see a paucity of billion-dollar transactions over the next 10 years, I see a plethora of billion-dollar transactions over the next 10 years. And I see Franco and Wheaton as being the primary beneficiaries of that.
Why I ask you that was I wanted to set the stage is to talk about how did you come up with, saying that the names that you said, the silver names, are high quality? Was it an EV to EBITDA ratio? Do you look at ASIC, jurisdiction? Is it a combination of everything? Is there something that you specifically look at?
I start with the premise that all jurisdictions are lousy, all of them. The most dangerous government is the one closest to you. In terms of the manifestation of political risk by dollars lost, the worst jurisdiction of my career was California, the state I lived in. The best jurisdiction of my career was Congo. So I start with the premise that all jurisdictions are lousy, that you need to understand the risks, not as presented by the nightly news, but rather the risks that are likely to impact you over time as a shareholder. Risks in Mexico around Peñoles and Fresnillo accrue to the fact that the president of Mexico is anti-mining, but she knows that the only economic engine in rural Mexico, other than narcotics, is mining. So she has to tolerate it, but she has a personal enmity towards the families that control Peñoles and Fresnillo. That's a real risk. The president doesn't like you. But if you're going to be in the silver business and you're not in Peru and you're not in Mexico, you're not in the silver business. You need to work through that. There's some low effort names in the U.S., Coeur as an example, or Hecla, brand names for silver. But their 20-year return on capital employed and their investment allocation decisions have been subpar. Yeah. So you need to juxtapose those two things. Do you want psychological security? Do you want momentum? Do you want a brand name? In other words, do you want something that might do well over 2 or 3 months? Or are you willing to take subjective political risk and get higher quality deposits in a higher quality geological jurisdiction? I take door B.
Well, ideally, I want no risk at all and 10x potential. And a lot of people on YouTube are promising me that. So I don't know what's up with that.
Yeah, I know. And you want a nasty weekend with 3 Victoria's Secrets models, but that's not on offer. Maybe at your age, but certainly not on mine.
This is a question about the producers, more or less. So do you do EV to MPV or something like that? But we can keep going down and talk about the developers. When you look at a company like Abra with economics on the table, what are you looking at there? Is it an after-tax IRR that's double digits payback? Is it whatever metallurgy, whatever else you might be looking at?
There, I'm looking at the fact that the drilling's become predictive. The exploration team, I think, really has figured out the genesis of that district, and they propose an exploration thesis. They test it with the drill bit, and lo and behold, they confirm it. I've seen this a few times in my career. And what happens when drilling becomes predictive, when the technical team understands the geology of a district, is that you add ounces and high quality ounces very, very efficiently. That's where they are. Your risk here really is that Melee fails. the top of Salta is really truly back beyond where they are, but there's increasing economic development up there, both from hard rock lithium plays, but Fortuna is up there. You know, there's increasing amounts of mine development. So the infrastructure challenges that faced Abra, uh, by the way, that deposit Diablios, I helped buy for Silver Standard 20 years ago. And there it was just an optionality play because it was truly in the middle of nowhere. Uh, you had to travel a long time to get to a place that was 8 hours away from there. That's over now. So what really attracts me to Abra is the fact that I think, despite the fact that the deposit's economic now, it doubles.
Yeah. Didn't you guys do that deal for like 2 million bucks or something like that?
Yeah, 2.5, I think.
Okay.
Now, we didn't regard it as a tier one exploration project because we weren't involved in exploring for things. We were involved at Silver Standard with trying to buy 40 million ounce resources that could go to 100 or 150, but we were trying to buy them for a nickel an ounce. We were looking for optionality in silver. In the early part of the 1990s, nobody was paying for optionality because nobody thought the silver price would ever go up. When it did go up, the Silver Standard share price went from 72 cents to $40. So in a sense, that deposit served its usefulness to us. When the shareholders of Silver Standard, the institutional shareholders, decided to change leadership there, the strategy that I advocated, the strategy that was brought forward by Bob Quartermain, changed. And they sold the deposits that we had acquired very cheaply for pretty good profits, and they used that to build a metals producing company. That strategy served both sets of shareholders. Likely, had management at Silver Standard not changed, the exploration success that they're enjoying today would have occurred within Silver Standard. But I think all shareholders were served by the transaction.
And to be fair, 2.5 million back then, just looking at how M2 has developed since, is
Good
probably
point.
like 30, 50
And
million bucks.
yeah, yeah.
You mentioned that you didn't think it was a tier, or you guys didn't treat it as a tier one exploration opportunity. What's a tier one exploration opportunity in silver? How do you notice that before everyone else does?
Well, I say that, and we didn't put a hole in it. I just looked at the fact that we didn't buy it as an exploration project. We knew that there was a lot of upside, but we were able to buy 40 or 50 million ounces of silver with exploration upside for 2.5 million bucks. We, at that point in time, wanted to say to our shareholders, this deposit is worth nothing at $5 silver and could be worth a lot at $15 silver. If silver does go to 15, this is a 10 bagger, at least for us. Rinse, wash, and repeat. We didn't want to focus on Diablios. We wanted to focus on the strategy of buying deposits that had 25 or $30 million spent on them, buying $30 million worth of data for $2.5 million, and hanging on for dear life. In the early part of the 90s, when nobody was paying for optionality and they were giving away optionality for free, I decided to take as much of it as I could possibly get because it was free. And the strategy was to buy 10 or 12 or 15, if we could, out of the money silver deposits that had had large exploration expenditures very, very, very cheaply, which is something that we did. It worked out extraordinarily well. Had those assets stayed in Silver Standard, had the management of Silver Standard not changed, it's likely that the beneficiation of those assets would be being done today by Bob Quartermain. That didn't happen. To the benefit probably of everybody. Bob went on and did Pretium, and now he's doing Dakota. And the SSR guys have built a fine mining company, merging with Alisair. But as times change, shareholder strategies change.
How has that changed for now? Like if you thought, let's just assume that you thought silver would double or triple from here on out, would you go looking for tier one exploration opportunities specifically?
Yeah, theoretically, but you're late. Everybody's looking for them now. The time you had to look for them was 5 years ago when they were cheap. Look what Tony McCooch did with Discovery. He went out when nobody cared about silver, and he bought one of the better high quality silver exploration assets in Mexico spent a bunch of money on it, did this sort of Toronto technique, just drilled the living S out of it. It would be tough to duplicate now. There's a lot of good competition out there. So for me personally, this is the time to be looking for sulfide nickels. This is the time to be looking perhaps for rare earths. This is the time to be looking for stuff that people don't like, not the things that people do like. If I'm going out looking for things that people do like, I'm assuming that I'm smarter than everybody else in the process, that I'm smarter than Frank Giustra, that I'm smarter than Pierre Lassonde, that I'm smarter than Ross Beatty. That's a dubious proposition. Smarter than Lundins. I need to compete with them when they're not in the race.
You're looking for what others don't like, which actually makes sense to me why you've been talking to me for all these years.
Oh, people like you now, but I'm talking to you for old time's sake.
Yeah, maybe you should stop. Maybe you should short me if there's an option. I'll let you know. What about what about the rankings that you have right now? Is there anything within your silver rankings that ranks as a 4 or a 5 today?
No.
Interesting.
A 5, yes. I'm sorry. Yeah.
Okay.
5, absolutely. Peñoles, Fresnillo, Buenaventura, Abra, Wisla, and then of the quasi-silvers, Pan American, which I have as a 4, actually, and Wheaton Precious, which I have as a 4.
Does anything, I know you generally don't like giving anything more than a 4. When I say more, just for people listening, the lower the number, the better the company is according to you. So anything that you're giving less than a 4 outside of silver or anywhere else?
I'm doing the work right now. As you know, I'm just back from Africa, so I've been 3 weeks out of pocket. And my bank just got chartered. So I'm about to graduate from being a banker, an application to being a banker. So I'm quite busy. But I suspect that the work I do in the next 10 weeks will elevate a whole bunch of the oil and gas sector from 4 to 3.
Interesting.
The market hates the oil business. I have 1 3 in the entire portfolio right now, which is Exxon. Hardly a gamey name. I think Exxon is selling for half what it's worth. And I think what it's worth on a discounted net present value basis doubles in 2 or 3 years. So I think on a valuation as opposed to a price bagger, a price basis, this is a 2 or 3 year 4-bagger. The idea that I can get a 2 or 3 year 4-bagger on a company of the quality of Exxon is unique in my career. It has everything to do with the fact that the market is chasing momentum and the market hates carbon. And the market doesn't care about cash. I'm an old man. I'm a banker. I think cash and the ability to generate cash is a wonderful thing.
Has it ever? I wonder, especially when it comes down to stuff like that. Were you looking for nickel in Africa, by the way?
Yes. Well, when I was in Botswana, I was just looking to have a good time. I missed the nickel trade across the border in Namibia, which Frank Giustra got, and I kicked myself for that. Yeah. Good work, Frank. I'm a Lifezone shareholder. I've known the Kabanga deposit for 30 years, discovered by Roman Schlanke, a mentor of mine. Going all the way back to the Sutton days. That company's financially challenged. I suspect I'll have the opportunity, if that's the right word, to participate in a new equity transaction. My focus nickel play right now is Centaurus in Brazil, which I think is a tier 1 deposit, deeply out of favor. People hate sulfide nickels, particularly in Australia, because they look at the competition coming from Indonesia. This company is Australian domiciled, and as I keep saying to you, I love hate. So nickel is hated. Australians particularly hate it. This is Australian domiciled. Has everything going for it as far as hate is concerned. Large deposit. I think it'll be a tier 1 deposit. I think it'll be in the lowest cash cost quartile in the world in sulfide nickels. I think it'll be in the best quartile in the world in terms of return on capital employed, even at today's nickel price, which I don't expect will last 5 years. So I'm very attracted to that name. Uh, you should note for conflicts of interest that I own an immodest amount of it.
Did you have a good time in Botswana though?
I had a ball in Botswana. I highly recommend it to anybody who really truly wants to go back and beyond. If popular culture is what matters to you in life, don't go to Botswana. You're in fairly remote camps. Very, very, very high quality human beings, wonderful human beings. It's a wonderful place. If your interest is the really, truly wild parts of Africa.
It's well, I'll hopefully be able to say the same sometime soon. We'll talk after this. Nickel, though, I thought after the Talon, this discovery, nickel would start going and people would start paying attention, but they didn't, and they aren't. What do you think is going to change that? What brings people's interest back to nickel?
I think that the price competition from laterite nickels fades. I, a year and a half ago, flew over southern Sulawesi, which is where the epicenter of the laterite nickel boom is taking place. Nobody should confuse me with Greta Thunberg. I don't think anybody will. But the environmental devastation that's being done by the lateritic nickel industry in Indonesia is really, truly unconscionable. And I don't think that the Indonesian citizenry, I'm not talking about the elites, but the citizenry or the government is going to tolerate it for too much longer. And if you have responsible mining standards around the nickel laterites, or if you have an increase in the oil price, or both, the cost of producing nickel laterites begins to soar, which puts a floor under nickel prices. That's what I think makes a difference. Will that happen a year and a half from now? Maybe. 2 years from now? Maybe. You'll remember, Antonio, I've told you for years that I think in 5-year terms, which is my durable competitive advantage. I compete with buyers who have trauma holding stock over a long weekend. And in my experience, investable trends don't happen over long weekends. So I'm buying nickel today because I have no competition buying nickel. I can buy high quality deposits. And I believe that an increase in the cost of producing raw nickel will increase and increase fairly dramatically in the 2 to 3 year time frame. I have a similar thesis, if you care, about rare earths. The price has been established by the cost of producing rare earths in Xinjiang in far western China. China is not as poor as it was 25 years ago. And the environmental devastation that's occurred as a consequence of low-cost production of rare earths isn't being tolerated in China today. Separate and apart from the geopolitical story around rare earths, the truth is that the floor prices for heavy rare earths established by the production costs are rising very, very, very dramatically. We haven't looked for rare earths outside of China because China produced them too efficiently. We had a bunch of them at Mountain Pass, which has gone broke 3 times in my life because it couldn't match Chinese prices. Mm-hmm. But as the Chinese prices increase as a consequence of cost escalation, rare earth deposits in other parts of the world compete on a much more even footing. So I'm attracted to that, even though the market, well, not even though, but attracted to that because the market hates it.
There's something with nickel that it goes back to our conversation about silver, where 70% of mine supply for silver is byproduct. So silver's supply doesn't respond to silver's price, and there's volatility spikes and the fundamentals lag to that. It's very unpredictable. It's hard to deal with. I find that sort of the community in silver is just a different breed of speculator altogether, a very interesting people to behold, if you will. And then with nickel, over 50% of the global supply is tied to one jurisdiction, right? Indonesia, and export rules and power subsidies and everything else. And then you add the complexity of battery tech and battery chemistry, really, that can change overnight. And that makes it also unpredictable. So how do you deal with that risk within your portfolio?
Life is a range of probabilities. I understand that to make the amount of money that I've made over the last 50 years, you have to be willing to be wrong on occasion. And I am very willing. particularly wrong about time. I know I'm right about Indonesia. The amount of environmental devastation I saw in the epicenter of the laterite boom, it's not an activity that's going to continue in today's world. Um, the other thing is that lateritic nickel is extremely energy intensive. And I believe that the oil price 2 years, 2.5 years from now is much higher than it is today as a consequence of global underinvestment in sustaining capital in oil and gas. Those two things change the cost to produce nickel.
Do you have to go down the or go up the risk trail, I suppose, when it comes down to nickel, given how early it is? Do you have to deal with or look into Lifezone, Talon, Canada Nickel, FPX, companies like that?
I look at the deposits by size and scale, um, by return on capital employed, and by potential AISC. I'm attracted to Talon. When I look at the market cap of Talon relative to the market cap of Centaurus, I'm more attracted to Centaurus.
Hmm. Yeah.
Canadians will tell you that it's a lower risk jurisdiction than Brazil. I'm a guy that had a condo in Vancouver, BC, and watched the combination of the federal government, the provincial government, and the municipal government raise his property tax 16-fold. Including a vacant home tax during a period of time with COVID when I couldn't visit my home. Rather than give foreign owners a break because of COVID restrictions, they doubled the vacant home tax. The most dangerous government is the government that's closest to you. That's just the way it works. If you're Canadian, you feel warm and fuzzy about Canadian politics until you experience them arithmetically. Now, the truth is that Canadian deposits, because Canadians are ethnocentric like everybody else, will probably enjoy a lower cost of capital for the rest of time. People that look like you and I, Antonio, and most Canadians look like you and I, seem to believe that money stolen from us in English by the legislature according to the rule of law is somehow less gone than money taken from us by more traditional methods in Africa by people who aren't white. But the truth is that the money's just as gone. One of the advantages of my life is that I've been willing to be fairly dispassionate about analyzing how money is stolen from me.
The issue that I suppose not issue, but a challenge that I have there with Canadian companies and Canadian explorer codes is that, well, oftentimes we're talking about magmatic nickel sulfides, as you mentioned. And I like risk. I suppose I'm trying to be you, but at the beginning of your career there, and so I'm trying to be smarter than I really am, I suppose, as well. But it's
I certainly was.
But the point about magmatic nickel sulfide deposits is that they're really, really hard to find. So it's tough for explorers, and they can miss 25 times, and they can miss 100 times in a row, and then tag on to something like Talon has, and but it's really tough when we're talking about like small cap explorer. So you've told me before that there's nothing more than $5 to $10 million explorer with some really good ground that you really like. So how do you deal with that within nickel? Do you go for the nickel explorer that are 3 to 10 million market cap?
I don't have to. Folks hate nickel right now. And so I can buy deposits like Centaurus or perhaps Talon. A year and a half ago, Magma. And I can buy them for half NPV, where I think NPV is going to go up. I might not get a 10 bagger or a 20 bagger, but I think a portfolio of carefully chosen nickel sulfide stocks with the third dimension, with drill holes, with deposits sure to grow. I think I can put together a portfolio of 4 or 5 that are pretty solid 4 or 5 baggers over 5 years. The idea that I have a 40% probability of achieving a four bagger relative to a 5 or 6% probability of achieving a 10 bagger with a penny dreadful arithmetically draws me to door A, not door B. Of course, psychologically, I want a 15 bagger as opposed to a 4 bagger. But when I juxtapose the potential upside with the probability of that upside, I'm drawn towards door A.
I'm still drawn towards door B. How do I fix that? I'm serious. Like I understand what you're
Age,
saying.
age, that'll do it. No problem.
Hopefully,
You're good at math. I mean, you're good at big math. You've been around the game. You've been lied to enough, uh, even at your relatively young age, that you understand that those $10 million stories are mostly $1 million stories. There's $9 million worth of water in there. Water should be free.
that's an important point there as well. Last time we talked about silver again was about 2 years ago, give or take. You said at the time that you very much like platinum. I think you said you'd
Yep.
place platinum ahead of silver. Platinum
Yep.
has had a decent run now, but also just a challenging niche market controlled by two countries, essentially, almost all of it. So
Yep.
how do you deal with platinum now?
I look for platinum deposits outside Russia and outside South Africa. Uh, Russia has one set of challenges, meaning that my Russian assets are currently in limbo. And South Africa has a different range of challenges. I must admit, I'm a very large Ivanhoe shareholder, which is putting an 80 million ounce platinum deposit in South Africa into production.
Yeah.
My platinum name is Bravo, which has what I believe to be a tier one platinum discovery, with, by the way, an IOCG overprint in Brazil. That meets a lot of criteria. And there's a lot of risk because it's exploration stage. And Brazil, I mean, Brazil's treated me very well, but I've had some tough experiences in Brazil too. There are social and political challenges around Bravo, um, but I'm attracted to the platinum business. The market sold off platinum and palladium as a consequence of this strange belief that the internal combustion engine is going to go the way of the dodo, which I don't believe. I believe it'll be the primary source of motor transportation, not just through my life, but through yours. I don't see a lot of young people in Belgium with, long hair and protest signs saying more smog, please, more smog, which means in order to enable the sale of an internal combustion engine, you're going to need to sell a catalytic converter, which requires platinum and palladium. I also see the possibility of supply disruption. As you point out, platinum and palladium are produced in South Africa or Russia, two not particularly stable jurisdictions. And if you experienced ongoing political or social risk in either jurisdiction, you would deprive the world of a lot of platinum. And here's the sexy part of the story. Right now, it takes about $150 worth of platinum in a catalytic converter to sell a $50,000 or $60,000 car. If the platinum price doubled, it wouldn't change the finished price of the car. There is astonishing pricing elasticity in platinum. If you combine that astonishing price elasticity with the high possibility of supply disruption, from a speculator's point of view, this doesn't have to happen. But if it does happen, the payoff is so extraordinary that I think a speculator like myself, who can afford a 50% loss, as an example, on a position, if he or she calls himself a speculator, they have to look at that value proposition. They just have to look. Otherwise, they should put their dough in short-term treasuries.
Most things seem to be in favor now, though. I mean, I suppose outside of nickel and lithium and a couple of other odds there, but like the big ones. So you gold and silver, platinum, even copper now with Grasberg's pushing for a very nice handle there as well. When does this run out of steam? What's going to be the stick in the wheel here?
I don't think industrial materials. I mean, people are buying the industrial materials narrative because of geopolitics. We're in a precious metals bull market right now. I don't think we get into an industrial materials bull market for 2 or 3 years. There are a lot of headwinds in the economy. I think the very soft oil price and prior to 2 weeks ago, the soft copper price is a function of the fact that there is a much slower global economy than people are giving credit for. I think we will experience real shortages of things like oil, gas, copper, nickel 5 years from now, 6 years from now. But you can have supply shortages if you have economically related demand shortages and you don't move price. So I think we have to. I think we have to absorb a soft economy for 2 or 3 years before we come into a real industrial materials bull market. Mm. I think the other thing that a lot of speculators don't recognize because it's not in their time frame is, first of all, that inflation is much higher than we believe it is. When Americans look at inflation, they think of the CPI, which I characterize as the CP lie. They believe that the deterioration in the purchasing power of their dollar is proceeding along at 2.5 or 2.6%. I think it's more like 8% or 9%. What that has to do with industrial materials is what is believed today to be an $8 billion capex to build a copper porphyry is actually an $11 billion capex. And that capex number is escalating at 8 or 9% compounded. That means that the incentive price needed to amortize 11 or 12 billion dollars is going up by 10% compounded. And that means that existing assets that don't need to be built, that are carried at book after a lot of depreciation with 25 or 30-year mine lives, are twice as valuable as the market thinks they are.
I know you know Lynn Alden, and she has this meme or a joke that's not really a joke, but she always talks about nothing stops this train, as in nothing stops the money printers, essentially, and the increase in M2 that we've talked about, which is making it really hard for me to get bearish on gold. I don't find a reason to be bearish on gold at all, or the precious metals. But you've always taught me to be a contrarian. So how do I reconcile being bullish on something that's popular? And should I still be bullish on gold?
It is possible to be bullish and take near-term profits. I am right now, as we speak, selling between a quarter and a third of my positions in the gold explorers and developers because they've given me too much too fast. I believe October is going to be a blistering hot month for the gold stocks, which is, from my point of view, a wonderful time to sell some because there's bids. I believe the gold price goes much higher over 10 years, but that doesn't matter. I have the ability to de-risk my portfolio right now, take all the risk out of the portfolio. When I'm at what I call the point of no concern, where I have a position where I've sold enough stock to recoup all of my capital and pay the tax, I become extraordinarily patient. And I'm putting myself in that position during the month of September and October. I believe that the US dollar, in an absolute sense, loses 75% of its purchasing power over 10 years. Paradoxically, I think it does relatively well compared to other fiat currencies. In other words, I think it'll do okay against the euro, okay against the Canadian dollar, okay against the Australian dollar. But in an absolute sense, I think it loses 75% of its purchasing power. I believe that it's likely that gold's rise in nominal terms, US dollar terms, mirrors the decline in US dollar purchasing power over 10 years, which means that I think that the gold price in nominal terms could easily go threefold from here. I believe, too, that over time that'll be reflected in the equities prices. I think that you look at the decade of the 1970s for the analog. That's what I think. Thinking's free. I have the ability right now to monetize the fact that the junior gold stocks have gone from unloved to loved. And I have the ability right now, without disrupting any of the names, to sell enough of my position that I have the rest of my position, which is substantial, for free. I have the ability to eliminate the downside in my speculative position by giving up a quarter of the upside. And that's a hell of a trade.
And that's only the speculative positions. What would you keep in that case? Just to establish producers, cash flow companies?
I'm adding to my Franco-Nevada. I'm adding to my Wheaton Precious. I'm probably done adding to my Barrick, but I was a pretty aggressive adder of Barrick. I am Uh, Adding also to my transactions as a secured lender in senior secured construction facilities for the mining business, which is a 12 to 15% internal rate of return business. Good business for me. Um, and I'm keeping a bunch of my, I mean, don't get me wrong, I'm keeping a bunch of my upside in the developers and the explorers. I'm just eliminating all of my downside. I run into problems even with veteran speculators talking about that. They said, how can you sell? You're in a bull market. Don't think so much. Just look at the chart. But I don't like when people tell me not to think, it just doesn't make a lot of sense to me. Uh, the idea where I can maintain 65, 75% of my upside and eliminate my downside just makes a whale of a lot of sense to me. You and I talked at least twice, Antonio, over the years, once around uraniums, when the junior uraniums were roundly hated. And it was just a no-brainer. It was an absolute no-brainer. All these internet morons who had uranium as part of their internet handle were bemoaning the fact that they ever learned to spell uranium. Nothing had changed except the price performance. This guy's got worn out. Those are no-brainer buy periods. But if you buy something because it's hated, when it ceases to be hated, that means that part of the reason, at least part of the reason that you own it, is gone. And when the reason to own a stock goes away, irrespective of performance, the stock needs to go away.
I'm not, we've already ran out of time. I know I've not been too respectful of your time. So what do you have coming up with the Rural Classroom and Battle Bank?
Well, Battle Bank is finally going to be open for business. After 54 months, the regulators have decided that I can be a banker again, which is lovely. So we look forward to, among other things, allowing Americans and Canadians to save in 20 currencies, not just the US dollar. We look forward to paying interest on checking accounts. If you're interested in interest, and you should be, think about Battle Bank. We look forward to being able to offer people credit facilities secured by their physical gold, silver, platinum, and palladium holdings. Our competition in the United States, the banks don't believe that gold is good security, despite the fact that we get to hold the security and I can sell it 24/7. I think it's great security. So somebody who has a big gold portfolio, a lot of capital tied up in their gold, don't want to sell the gold, don't want to pay the capital gains tax, but needs access to credit, maybe to buy distressed real estate, whatever purpose, come to Battle Bank. Anyway, I look forward to doing business as a banker finally, as opposed to an applicant banker. The Rural Classroom, we've done a 3-part boot camp on gold. The first was physical gold, why own it, how to store it. The second was the best of the best, the Francos, the Wheatons, the Agnicos. This is the rest. This is the junior gold segments coming up in 2 weeks. We have a great faculty. John Hathaway, been a gold stock buyer for 40 years. Hardly a Johnny come lately. Adrian Day, 40 years. The junior analyst is Logo Botigre. He's only been at it 25 years. And then, of course, me. Don't come to the boot camp if you're the kind of person who buys the Sunday paper for the crossword puzzles and the funnies. We're going to work your behind off for 8 hours, and then we're going to give you a tape so that you could repeat the process. So if you aren't prepared to spend between 8 and 20 hours doing this, don't come. Do come if you want to learn the how and why of gold stock investing, if you're prepared to work. Like all educational products offered up by the Rural Classroom and Rural Investment Media, this has an ironclad money-back guarantee. If you buy the course, take the course, and don't think you got your money's worth, email me. I'll give you your money back. A financially riskless transaction. Few and far between today.
Thank you so much for doing this. I really appreciate your time.
One more thing, anybody who cares what I think about natural resources can go to my website, Rural Investment Media, list your natural resource stocks, and I'll personally rank them. No charge, so of course a money-back guarantee there too. I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have value. That's ruralinvestmentmedia.com. List your natural resource stocks, please, please, please. No crypto, no pot stocks, no tech stocks, just natural resources. Leave an old guy to do what he does well.